Hey, Simple Passive Cash Flow listeners, please go to the website, sign up for the Investor Club if you haven't done it, the Hui Do Pipeline Club. We get all kinds of different pronunciations of it, but that's how it's really sounded out. Hui Do Pipeline Club. And today I got my friend Ross here. How's it going, Ross?
Doing great. How about you?
Good, good. So, name of the game today is Coaching Call. Ross volunteered to, we don't know if that's his real name or not. We might have just given that to him. But he volunteered to put up his personal financial sheet in exchange for pretty much free coaching. He could be a fictitious character. We don't know. We could be using his exact numbers. But here on the screen, we've got your personal financial sheet for those of you watching on the YouTube channel. But if in podcast form, hopefully this will help out people. And I guess, Ross, tell the folks a little bit about yourself. You and I kind of know each other, but let's make like it's a first time call. Let's kind of simulate this for the folks. So how did you first kind of hear about, how did we first get connected?
Yeah, so I'm a software engineer out in Silicon Valley area, so San Francisco Bay Area. Basically graduated a couple of years ago from Berkeley with a software degree and ended up doing what a lot of people do, staying out here and continuing to work. It's a great industry out here and started to accrue some wealth over the years, and I've just started to about a year ago kind of taking a look at where I can invest this stuff outside of kind of your typical avenues. That kind of led me into the real estate game, like I think a lot of people end up doing. And I started out trying to just educate myself a lot, and ended up looking at things like podcasts, just doing a lot of online research myself, and connecting with people like Lane, and just making personal contact and trying to glean information every time I could. And that's actually how I found Lane, was through the podcast. And then from there ended up kind of connecting with Lane in like all the different areas that he has there through the Facebook group, and through the pipeline, and kind of made contact there with Lane. And that kind of started to open my eyes about, look at what else real estate can offer there. And so that was kind of an awesome intro there. Made our first call, I think almost like 8 months ago, maybe 9 months ago.
Yeah,
Kind of just an intro chat.
Yeah, and you're pretty new, right, at the time. It's not like you were trying to, you were fresh into this stuff, which is good, screwing around with others.
Yeah, so I think that was close to about a year ago where I was just kind of diving in with things. And then from there, just educated myself a lot. And then about 6 months ago, took the first kind of dive in on a duplex out in the Philadelphia area. And that's been, that was like my first investment there. But the learning curve's gone very quickly now. And so trying to kind of accelerate things and see what next steps are.
So did you go to grad school, or did you kind of come right out of college around 2010-ish or something like that?
Yeah, so I ended up Berkeley. I went to grad school there, so kind of wanted to get the next next step for my engineering degree, and ended up just doing that through a master's degree. But it was pretty quick. It was like a 1.5-year program I ended up doing, so it made it very difficult, but also kind of got me out of there quickly. So
what did you do in like the last 8 years or so, investing wise or money wise? What were kind of...
Yeah, so I guess I graduated 5 years ago. So outside of that, I started kind of taking the typical approach of, so I started maxing out my 401k, and I started out at a really big company. I've then since moved to some startups, but kind of went through the typical avenue at first, where I would invest things into like my 401k and Roth IRA, was maxing those things out, also maxing out my employee shares matching as well. So that was kind of the typical approach, and ended up now having quite a bit in those retirement funds, which looking back, I've kind of regret that, but you kind of don't know when you first start kind of where things are going. Stopped contributing to that, I guess maybe 2 or 3 years ago. but have left that mostly in stocks and everything like that. And I used to do a lot of stock trading as well when I first kind of got out of things. And then as I started getting more into my professional life, moved more and more towards just kind of going with the index fund, purchasing that and then letting that go. But now I've basically moved most of my investments outside of the stock market, besides what I have in my retirement right now.
Right. So I'm looking on the screen right now. You make a pretty good salary there, and because you were kind of doing other things, you had some time to build up a little bit of a war chest here, approximately, let's say $360,000 of assets, not too much debt there. So definitely something to work with. And it's kind of funny. The last couple of these guys are making like 30-40 grand a month. Makes us engineers look like poor people.
Yeah, that's crazy.
Not too shabby if this was a matchmaker's YouTube channel, but yeah.
Yeah, seriously.
But hey, we're getting there.
Looking to get there.
Yeah, we're getting there. It's all about which direction you're heading as opposed to where you're at.
But yeah, I mean that's kind of where I started looking at like what I could do with what I had, and it's like there's got to be better routes to go here. And like I said, I'm pretty open and currently am taking more of an active approach to things in order to kind of accelerate that. But I don't always foresee that as being the case, definitely.
Right. So I always break it down to like the big three, right? And time, money, knowledge. Starting out, you didn't know too much, but you're not an idiot. You're a pretty smart guy. Money, you got a decent amount of cash to get going, so you're good there. But I guess time-wise, how to kind of paint the picture how work is these days? You got time to do some stuff on the side, or is it getting more and more difficult?
Yeah, so like I said earlier, I started out kind of at a big corporation. Well, first of all, as you get to know me, you'll know that I don't like I don't like not being busy, as you'll hear. But so I started doing like the big corporation job at first, but I had a roommate who I also went to grad school with, and we kind of did some like Kickstarter projects and like little engineering team stuff on the side. We kind of took that to the next level and started actually, we come home from work and then work like another 6 or 7 hours on our side projects. And that was super fun. And I really liked the entrepreneurial side of that and just the problem solving side of it. And then also the ability to actually use some of that, to kind of control your destiny there, where if you make a product, you can get, as you continue to scale the product and the profits, then that goes directly to you versus like the corporate world where, you're going to continue to get your salary. But
no offense, Ross, but it's very typical. I mean, the guys that kind of find their way to this, engineers, like half of you guys are engineers. Definitely like I call you guys spinning tops. Like you always got to be doing something.
Yeah. So it's kind of crazy. My soon-to-be fiance moved up here recently, and so that's kind of, I'm trying to put more time towards that now, and that's been a nice change. But I guess, continuing to go back, I ended up kind of doing a different team. We had got teams that from like, I don't know, 3 to 8 people, and we kind of started building projects. Some of them we did okay on, and some of them did not. But it was kind of just always kind of growing and learning, and obviously that stuff paid off, and like for my technical side of things and from a career wise. But ended up moving from there into an actual startup. So I was just doing like 8-hour day at the regular job at first, and then kind of working on the side. But then I actually went to a startup to work, and then the hours kind of blew up there, and I didn't have a ton of time to do stuff outside of that. And then I've recently switched. I'm still at another startup, but it's kind of gotten more reasonable at this point. Been there for a couple years, and things are going well there. But they just have a little bit more resources. So it's made things, that's kind of been the other kind of trigger of allowing me to have more time to do stuff outside of work. So that's given me more time to focus on the real estate aspect of things.
Okay. I'm looking at the section 3 here, your financial snapshot. You got any like 401k, any of that kind of stuff? Equities, paper assets? Kind of look for it. You kind of
Yeah,
switch things up on me. You got a different personal financial sheet than I'm used to.
yeah, so I actually can't scroll on your machine actually, but
Is that it? The
yes,
Roth IRA?
those two. Yeah, those two guys. So I have the Roth, and that was the one that I continued to contribute to after. And so, but there was an original amount from like the first year or something in the 401k.
Oh, so you're
I've not converted that yet. So
okay. So you caught on pretty early then. Just
yeah,
a
so
couple of years of putting the 401k, you're just like, screw this, it's
yeah, I
dumb.
think it was just my first 2 years I contributed to it, but it was definitely it was definitely one of those where I was just trying to max it all out and thought I was kind of doing the right thing. But looking back, I'm like, man, that could be great to have that cash right now to spin up. But
So just to let you know what I'm doing now, Ross, I'm kind of looking at like, so you're kind of building your portfolio, and we're looking for, you need liquidity, right? Because you need to go do deals. So
yeah,
what I'm looking for here is your low hanging fruit, where we're going to pull the liquidity from first. Because no one is 100% efficient, right?
yeah,
Everyone's got some
definitely.
money here and there. You're not too bad.
It's
I mean,
actually something I learned from like looking at your stuff though, is it's kind of, I don't know, like I've seen you post some things on like the AHP fund, I believe, and kind of looking at some of the life insurance policies of kind of like like you said, your on deck circle. And it was kind of interesting because initially I was like, okay, but I'm always like spinning up deals and stuff like that. But then, in practice, there's actually quite a bit of time where, you're not like, you're just like right now, I just have cash sitting in the bank, and so that's definitely something that, that I took
yeah.
away early and kind of trying to move towards.
And if you guys want to get a hold of that article and that video, it's simplepassivecashflow.com/O fund, and O stands for opportunity.
Yeah, that was a great article.
So so how much are you, like, you make a pretty good salary and you got some investments now. How much are you able to save every year?
So
Assuming you're not paying for like a wedding every single year, right? Like,
yeah, so it's actually kind of changed quickly. I guess I started out, I guess 2 years ago at a much lower salary. And so it's kind of almost doubled within the past year or so. So that's kind of been a big help. So, but it does kind of skew what I saved before and what I'm saving now. But I live in the same. I have done a pretty good job about as the income continues to grow, I haven't really changed anything about my lifestyle or anything
yeah,
like that. So that's been a big deal. And also, yeah, just the rent situation out here in California is kind of crazy. But if you can find a place that has the rent control and you get in early there, you can actually it's actually a pretty sweet deal, because then you can leverage all the upside of the higher salary and stuff like that, and kind of hedge against the main complaint, which is the cost of living from housing perspective. So I have been able to do that. My rent's pretty cheap relative to everything else. So that basically haven't changed my living situation that much. So that's enabled me to start saving pretty quickly here. So
yeah. And just a little bit life advice from guys a few years older than yourself. I mean, a lot of us, we're getting at that age where you're kind of a veteran at the workplace now, 10 years into the career, strange enough. But if you're halfway decent, which I know you are because you've found this stuff, they'll likely put you into more higher paid positions, right? So it's just like your next job will probably make like 250, but a lot more headaches. And that's the question. For most people, it's a no-brainer, but for you, it may not make sense. And that's so, especially now if you have kids or something like that, right?
Yeah, so that is, like I said, I don't have that situation right now. So
But
I definitely would see things changing if that were the case.
yeah,
It's very interesting. The company I'm at right now, everyone's a little bit older, but they're all like the same age, and so like there's just huge chunks of people having kids and like starting families. So it's been very interesting to see, but also like kind of foreshadowing, I feel
yeah.
like.
So let me take a guess here. You're probably able to put away what, about 60 grand a year or something like that?
Yeah, I think a little bit higher than that,
Yeah.
based on just what I'm saving right now. But yeah.
Well, you got new money here. You're only 2 years into this new salary. It'll be 60. Well, on paper it'll be 90, but
Yeah.
in real life it'll
Yeah.
be 60.
There you go.
So that's cool, right? Like, I always say, like, people building their net worth, like if you're able to save more than 50 grand a year, that's like a couple turnkeys or a big syndication deal a year. I
Mhm.
mean, just do the math. You're gonna be financially free within the decade for sure.
Yeah.
Sure. So
Yeah, that was really encouraging. Actually, I remember. I think you posted something recently that was like outlining that, or maybe it was. I think it was on the multifamily summit that I saw that because you were
yeah.
doing
So
that as
this, I mean,
well, which
this
is awesome.
advice goes to guys like yourself, right? Like, calm the heck down, right? Like, you'll be fine. But so I'm looking at this, and I'm looking you're fine. You're making enough. You're saving enough income to put away that you're gonna be fine. I would say if you're confident enough in this thing, I would say let's cut the Roth IRA and a 401k out of here, and let's just cash it out and put it into deals. That's
And
something to
it,
consider. Just also for simplicity's sake too.
yeah, that is sure.
So
Would you? I guess. Well, the 401k is easy, right? Because I just cash that completely out because I've already paid taxes on that, right?
the Roth IRA, you
Or
already pay
sorry,
tax. Yeah. So my
sorry,
speech
you're
on this.
right. Yeah, sorry, I got those backwards.
So my speech on this is you're gonna pay taxes on this now or in the future, right?
Hmm.
I'd rather pay taxes on it now because you're gonna be in a lot lower tax bracket now, and in
Hmm.
the future you're gonna make a lot more money. And the way this nation's going with quantitative easing, we gotta pay back this thing somehow. So taxes will go up.
They're definitely going to go up. I'm a huge believer. Yeah.
Yeah.
That's kind
So
of
that
where people fall in those camps, right? Is like either they
yeah.
tax going to go up or they're not. And it's like pretty good indicator it's going to.
Well, I mean, even if it stays the same, you're slated to make more money. I don't know who wants to make less money or who thinks they are. That's not a good goal.
Yeah.
So the 401k, you're gonna have to pay penalties. Like I think it's like 10% now.
Hmm.
But if you think about it, if you're making in a deal like 15% as
Yeah.
opposed to like 8%,
That's a really good perspective.
that's only like a couple years is the crossover point, right?
Hmm.
Engineers, we love our crossover points and decision trees like that. So, but you gotta make your own decision. I think there's only 17 grand and there's no big deal. I mean, just
Yeah.
cash it out more for simplicity. The
Is there
guys
anything?
are more confused are the guys with like 100, 200, 300,000, right? Now we're talking about blowing their AGI up and paying a lot of taxes. And there's a lot of different strategies, but you don't have to worry about that.
Yeah. I did have finally like reached out to some real estate based CPAs to get a little more guidance on, kind of some of the tax side of things too. So that'll help as well.
Yeah,
But
yeah. And if you want, I can connect you with my guys. If you guys
yeah.
listening, maybe I want to build a relationship first. I don't want to just send you to whoever, then I start getting a bad name. So that's why I don't put it out there.
Mhm.
But yeah, we can talk about that after.
Cool.
The Roth IRA, I would, if you're looking at an order, I would take the Roth IRA first because that doesn't really do anything to your um, taxes,
Hmm.
and then the 401k after.
Yeah. And then I guess I do have, because I did get a property on the board last year. So what I guess that I could take some tax advantages there and apply it towards there. Not sure how much I would actually be able to though.
Um, it's like you're not a doctor, man. Relax. It's not like you're not in the 40-50% tax bracket.
Yeah. Yeah,
Right.
that's true.
But I hear you, right? Like I used to be the same way, right? You start off trying to optimize.
Yeah.
And here we are, we're just sitting here and you're kind of just losing, you could be investing that money, right? Put it in
Yeah.
something HP.
Yeah. Something that I can access before,
Yeah.
I'm 70.
So let's talk about a little bit what you're up to in
Mhm.
terms of investing wise. Put up your
Yeah. So not much on there right now, but like I said, I did this purchase about actually exactly 6 months ago because I'm currently refining it. And yeah, so it was a duplex. Did rehab on it, and it was a pretty light rehab. It took like 4 weeks to get done. We got it from a distressed buyer, had to get rid of it, so was able to do that and then finish up the rehab, and then from there got renters into it really quickly, and so it's been cash flowing pretty nicely. I think for the refi, it's pulling in around 1,100 a month on that guy, but once I get the new mortgage going, it'll be pulling in around 450 or 500. So I think this isn't that particular one. I think it might be the other one.
So this is just to break this down. You put down 70 to acquire it, or 75 to acquire it. You put in almost 60 to rehab it remotely, right?
Yeah.
And you all in for 130. Then you refinance your money out. This is just a textbook burr, right?
Yeah, exactly. So I was just trying to, which was pretty cool, because I didn't think I would be able to find a team basically to make that type of approach happen, being outside of like being very, very active. When I do say I'm active, like I'm doing it at night kind of thing, but I would say total hours I'm putting in per week is still pretty light compared to anything that, some of the things I've done in the past before. So it has been pretty cool to be able to find a team that allows me to do to force some appreciation there, as opposed to, I originally looked at Turnkey, through the roof stock and stuff like that originally. And cause that's what I thought the only thing I was going to be available to me. And then I started learning about passive multifamily investing, and then also other opportunities like this. And so then I realized wow, I can do a lot better. And so through the roofstock way, the turnkey way was good in the sense that I could still, if I was very picky, I could still find good, return on investment, but I would have all that money tied up. And then this has kind of just allowed me to get back a decent amount of that. I usually don't get all of it back. It's pretty tough to do, especially if I use any type of financing. But
so how did the fans want to know outside, how did you go about building this contractor? And do you think that it's going to go long-term relationship?
Yeah. So I just started going through Bigger Pockets and just trying to comment on, ask questions as much as I could. And through just various Facebook groups online, including yours, just end up talking to different people. And that's been the biggest key, is just continually, having an open mind and a learning mindset, and, trying to provide value to other people, and then being able to, just continually try to reach out. One thing that I thought was super useful that I did is every podcast, when everyone gives out their contact information, I took it down on myself to just make some type of connection with them outside of that. And if nothing else, just to thank them for the advice that they gave, and just to make that contact. And that was a key thing that allowed me to start branching out pretty quickly. And it's interesting, you probably had a similar experience, but looking back to what I thought about real estate and stuff like that a year ago versus now, it's just crazy. And a lot of it's just because of the people I met and the resources I've used there. But started talking to various different people, and then through one of them got connected. I think through one of the lenders had a guy that they knew, and that put me in touch with those guys. And basically, it's kind of a group, and they provide kind of a wholesale. They wholesale a deal to you, and they of course take a cut off of that, and then I also have a construction group that takes a little bit of a cut off of that as well. And then, but each of the process is kind of owned by me separately. So for example, I'm providing all the capital. I'm, kind of setting up the schedule and at a high level for the construction. And then, I'm the one getting the property management group and getting that going. But I've been able to do it all remotely pretty easily, I would say.
So I would call that sort of hybrid turnkey. I mean, it's sort of like you're working with these sort of entities. It's not like you're going out, sending out yellow letters for the wholesaling yourself, but you're a little bit more on the hands-on side of the burr, right? Are you getting third-party inspectors to go in and check this work out and multiple?
Yeah, so I actually have Yeah, I've used a couple different methods, but one way is pretty cool is using like through the TaskRabbit or just kind of like rant or some people I've talked to are using like Craigslist, but yeah, it's pretty easy to go find someone to get out there with a camera and that you have them let them into the property. They can take kind of third party pictures and give those to you. And that's kind of a way I originally, for some kind of third party accountability there. But honestly, at this point, I trust these guys pretty well and haven't been so paranoid on some of it, but which has also kind of allowed things to move faster. But yeah, at the very beginning, I was doing an inspection before and then after, and then also having this kind of third party progress monitoring as it happened as well. But you're right, it's definitely kind of like a hybrid turnkey versus
Yeah. So I mean, I think you got it down to sort of a system where it's not incredibly time consuming, not more than like 5-10 hours a week.
Yeah, definitely.
I'm sure you can sustain that for a while, but I think that the issue here, and it's nothing you can't work your way through or get enough money that you can mitigate the failures down the road, but it's a single point of failure, right? You're working with some dude who has some trouble with the family, and now he takes your draw request and just pockets it, right? That's the danger.
Yeah.
And there's really no way to really mitigate that. You can get really fancy with your draw schedules and stuff like that and contracts, but at the end of the day, and the property may not appraise too.
Right. Yeah. Yeah, that's definitely a key factor. The first one I bought in all cash, but I'm currently looking to use like some private financing for some of these others that I've looked at, and so that's even more critical on like an appraisal and that things are done the right way. So
yeah, so I'm kind of looking back here and like your war chest. How much liquidity do you have right now to kind of throw at this stuff? Can you get 2 projects going at one time, or you kind of
so I can usually, so the property prices where I'm dealing with in Philadelphia end up being anywhere in the kind of like what you saw there, but they're from the like 50 to 150 maybe $1,000 purchase
all in 100 or ish 100.
Yeah, you're under 200,000 usually, and so with that, and so I also refinanced the first property, which pulled out all like 140K of that. So that's kind of added additional to it. So yeah, I definitely have enough to do 2. If I really wanted to, I could probably do 3, but I'm not going to push it there. But yeah, I can do about 2 at a time right now. So that's kind of what I'm currently in progress to do.
Yeah. Okay. I mean, that's good, right? You can kind of choose and you be picky.
That's I haven't. There's definitely a tendency, and this is also nothing I think I've heard you say before, but yeah, just being really picky in this time, because there's a lot of deals that kind of go by, and you're like, kind of get this weird deal antsiness where you're like, oh, I need something. This cash is like waiting to do that, and so that's actually been something that I've had to, physically tell myself to step back and really focus on, like, is this going to be as good as like good or better something you've already been able to do? Because there's been quite a few that have come across. I'd say, I mean, I usually get one once a day from some source, and it ends up not meeting my standards. And so, but there's definitely a temptation to still go for it, even when it's like not the best.
So another thing you got to think about here is, you got all your eggs in one basket, right? And for you you want to keep doing this, I would focus your next action item is to go find a second or third contractor, because these guys will churn on you. And it's just a matter of time.
Yeah.
So while you're counting your money, I would be finding another person to date. Right?
Yeah.
I mean,
that's really good advice.
If I talk to you in the next 3 to 6 months, you better have somebody lined up.
Definitely.
Right.
That is
just like virtual assistants. You got to keep finding another one and another one and another one. Just, their lives change. People change.
Yep. The other thing I was curious I was kind of curious your thoughts on kind of diversifying target markets at this point. So I'm kind of on the fence here, and I was just curious what your opinion was, because on one side I have one property, right? I'm in the pipeline to do maybe a couple more in this area right now, which is great. But like relative, like it's not a whole ton of, actual like monetary costs in one area, but, at the same time, there's also, like you said, putting all the eggs in one basket right there. And so I'm curious what your thoughts on versus like focused energy to kind of get things going versus trying to diversify right away. Because there's obviously the overhead of trying to find a new team somewhere else and, analyzing that market, learning it, and then starting to underwrite deals there as well. And so I was kind of curious what your thoughts were there.
Well, the fundamentals are you want to diversify four ways, right? Different partners, different markets, different asset classes, and different business plans.
Mm-hmm.
Right now, you're hurting on the locations one.
Right.
You're in control of your own destiny, and I think that's good. But yeah, the location and then asset class are all in one.
Mm-hmm.
And but
it's
the
tough
fact that
because it's like that's where I'm starting. I'm just starting too. So it's like, how diversified can you be on your like first property, right? So I think there's that side of it too. But it's definitely something that is on my radar for, building up that same kind of network outside of this area.
So when 10 years from now, when your net worth is $1.5 million, you have more time constraints. You need to kind of think what you want to be doing, what kind of lifestyle you want to be having. You still want to be churning out two of these things every quarter, 8 deals. I mean, it's great returns, right? You geek out on that key stats thing here.
Yeah,
Is that what you really want to be doing, right? Because like I said, if you're already able to save 50 grand a year, you'll be fine.
Right.
So it may be exactly what you like to do, right? And I think engineers, this is where you get into trouble because engineers are very capable at this in terms of managing contractors, whether it's computer programmers or civil engineers managing real contractors.
Mm-hmm. Yeah, and I think part of it too is like you said, where I am in my life right now, where not married yet, don't have a family, and so for me, I kind of would rather kind of kick that off earlier and then get that ball going so that I can back off a little bit more sooner than I potentially would have been able to before. But
so you wanted to kind of talk about the infinite banking thing a little bit, right?
Yeah.
I think originally I was kind of like, oh, I don't know if you should be doing that because I thought your income was a little bit lower at the time. I think you told me.
It's changed a lot over the years, so that definitely could be the case.
But you're just now hitting your groove, and you're just now getting to be to a platform where you can be doing 2 deals at any one time. Mm-hmm. I still think you should maybe not do the infinite banking because you're incredibly talented investor, but also your liquidity is very valuable to you.
Yeah.
So I would kind of vote against it.
At this point.
What did you kind of select? How much per year did you put into?
I think around 40K
a year.
Yeah. So it would be, I think it's like, I guess it starts out with, I think it's like 20%. I'm not quite sure. I'd have to look on the percentage that gets, locked up in the premium during the first year.
Yeah, usually about you lose 30% of it in the first year. And then the third year you get 90%, right? You only lose 10% of it to fees.
Right. Yeah. So it gets lower pretty quickly, but that like when cash is king right now for me, it could be, it could be definitely worth considering holding that off.
I think you're going to make the same mistake I did. Cause I committed to 50 grand my first year. And then
I saw that actually. And I was like,
8 months, I was like,
It's like, am I getting into this wrong thing? But it is a little bit flexible. Like I think my minimum is 10K or something like that. So if I needed to, I can just put that in for the first year and then bump it up more the next year. I did kind of take a little bit of from your playbook there where just because of the heat of the market right now, I was kind of wanted to focus more on like establishing some of these things.
Yeah, it kind of slows you down, right? Because you're running with scissors right now.
And I'm like, I'm never gonna be super happy about, like putting away that whatever 30% the first year. And I'm like, well, if any year is a good time to kind of get it going, might as well do it in a year where, I can start to make a comeback when I'm, you know,
Yeah, yeah, no, that's a good idea. You
so
kind of know how you are. Because
yeah.
that's the scary thing. I see you guys. I mean, it took me a long time because I didn't do any of this burr kind of stuff. I just did it
Hmm.
really slow. But then I see you guys running around with scissors 100 miles an hour. And I'm like,
Yeah,
man, this is not the time that you're doing that.
right, exactly.
I mean, I think everybody says like with 80% confidence, the recession's coming next year to 3 years.
Yep. Yeah, exactly. So that's literally why I kind of took a look at some of this stuff. Also been looking at some of the like asset protection kind of structures there, and you hear a bunch of different things passed along, and so I've been looking at that to see if like some sort of trust or um, yeah, the different plays there to start to put these properties under. Because right now, like for example, this first property was just under my own personal name, and I've done the like Fannie Freddie, the nice and um, cheap quote refi terms there, but obviously I don't want to continue that with the rest of my properties. I want them to be um, yeah, to get the proper asset protection there.
Right.
Outside, of course, I do have good insurance there, so at least I have that. But
Yeah.
so
Yeah. I
so
mean,
the,
your plan makes sense. I mean, like how you use the infinite banking as sort of a hedge.
mhm.
I think that's a good idea.
Yeah, so I mean, I literally was like listening to, or I was reading that article, and I was like, oh, well, what can I do to kind of pump my own brakes here, or something that I could, get going that's obviously going to be good for me, but might
Yeah.
might be the ideal time to start that. So
Yeah. I mean, it's gonna get you, right? Like there's gonna be a second deal that's gonna come up and you're gonna be 20 grand short and you're like,
yep,
dang it. This is after you cash out your Roth and your 401k. You're still gonna be another 20 grand short and you're like, shoot, I shouldn't have done that.
yeah,
But then, very well, maybe 3, 4 years from now, you're gonna be lucky you kind of did that. You had that dry powder ready to go.
yeah, and also, I mean, to your point, kind of, even if I was just saving what I'm doing right now today, like I'll still be in good shape, regardless. But it's just like you're saying, as an engineer, you're trying to like crank out optimization for
Yeah.
what you can get out the best this year. But I think having a little bit of um, yeah, something to kind of hold me back a little bit too will not necessarily be the worst thing. But yeah, you could totally be right there with the fact that something could come up, and it
Right.
probably will. But
Cool. So with the kind of wrapping up here, was there any kind of other topics you wanted to kind of discuss or?
I was just kind of interested in more like what time period that you ended up kind of getting at, like I guess diversifying outside of asset classes. And I know you have described this at some point, but I was just kind of trying to see when you kind of moved into some of the different asset classes that you kind of looked at before. Have you gotten into self storage or anything like that yet? Or
So when I go into other asset classes, I'm a limit partner. I
mhm.
don't in all
Yeah,
in
yeah.
all like to be honest, I don't really have a clue really how to operate those things.
Hmm.
Right. And this is where you kind of become this is the transition before becoming like a real estate groupie and like a sophisticated investor who doesn't really know how to operate it, but they know
Hmm.
how to syndication deals and private placements. You're making a bet on the operator
Right.
and the
Yeah.
asset and the deal up front, and you may not know how to operate that thing or know the ins and out, but that's what you do for the whole grand scheme of things.
Hmm.
um, so I know apartments, but I don't really know mobile home parks, or I know self-storage or how to run a assisted living, but I know enough to be dangerous and to pick a winning horse. Hopefully, that's my
Exactly.
my bet, right? And a lot of that comes with networking, right?
Hmm. Yeah, that's been. I mean, already starting to see it as I growing the network, which is kind of why I was asking. Is there's more opportunities that I didn't even know existed to invest outside of the real estate, which to me it feels like what I'm you know most acquainted to and most knowledgeable. But yeah, I think like you're saying, if it comes from the right source, it can definitely be worth pursuing, even if you don't know everything about it. But
Right. Like, do you know how to do property management? Heck no. You kind of know the ins and out of it, but you got a
Yeah.
referral and you trust that you build a relationship with the person to get that for referral.
Right.
That's
Exactly.
where what really matters. That's where the rubber meets the road. I
Yeah.
think,
And especially as someone who's focusing mainly on my, engineering career is at a high level, right? Like you want to be able to get to that point where you don't have to know everything, right?
right, enough. Just like, we're gonna go like look for some entities for you or get a lawyer or CPA, right? You don't need to know everything, but if you go like watch the simple passive cash flow like tax seminar we did, you'll know enough to be dangerous, at least not to get
Right.
screwed.
Yeah.
Right. And that's my main thing, right? Like, simple passive cash flow is more like minimum effective dose for investing.
Mm-hmm.
We're not going to teach you to here to be the next Ken McElroy or whatever. We're gonna, you know, I think for a lot of people, doctors, lawyers, more high income earners, and you're probably in this category, you're getting there. Your time may be better spent at your day job. I'm sorry that
Mm-hmm.
that's what you don't want to hear, but that may be the
I really love what I do. So
yeah.
I don't see myself leaving it for a while. I just kind of want to have the choice to if I do.
Right, right. But if you're able to passively make like a 15-20% a year thing, wow, that's amazing. You can make that kind of salary and invest it at that rate. And
Yeah,
you don't really need to get the 30%, right?
exactly.
So that's where I'm coming from.
Mm-hmm. Totally makes sense. Yeah.
But yeah, was there anything else for the cause before we head off?
No, definitely appreciate all the content you put out and for taking the time today to do this.
Yeah, appreciate
Super
appreciate
useful and motivating. Yeah, it's good. It's good to have that goal session earlier. Kind of got me on the right start. So
Oh yeah. I think what was that? simplepassivecashflow.com/2019 launch. If you guys want to watch that one.
yeah, some good stuff.
But yeah, appreciate it, Ross. I think you're very typical of most people that listen to this thing for some strange reason. Engineers that are younger guys like to watch this channel for some strange reason. But
Yeah, so I'm just hitting. I saw your like graph where the family graph, so
yeah,
I'm right on this side still. So
yeah. But isn't it amazing if you can set yourself up to be doing the right things with very minimal effort to go through that period and you
yep,
don't lose that time, right? Because
exactly,
yeah, I mean, it's not like you're too late if you're in your 40s or 50s, but it's like, wow, how powerful it would be to set yourself up and be doing the right things with minimal effort.
exactly. That's kind of the reason why, like I was saying earlier, I am trying to kind of maximize it right now, so that because I know that time will come and it'll have to happen. So
Yeah. So, and if you guys want to join the mastermind, we have simplepassivecashflow.com/journey. But I'm sure Ross will be in there talking a few times or something like that.
you'll hear me again. Don't worry.
All right. Well, appreciate it, guys, and we'll talk to you guys next time. Bye. Hello, RA Aloha members. On August 10th, I'm going to be heading out with the other members, and we're going to check out this SDIRA Summit. And we're also going to be doing an after party if you guys would like to join us. If you can't make it to the full day seminar, we're going to be charging $20 for you to come to the after party, just so you can get the Cliff Notes version and hang out with the cool kids who came. So what is this summit about? It's about self-directed IRAs and using that to get at your retirement money to be able to invest in things like real estate. I'm kind of got mixed feelings about this self-directed IRA thing. I personally like some QRPs, and I actually don't even use retirement accounts. I'd rather get at my money quicker than to wait till I'm 65, whenever that will happen. And I have some thoughts about self-directed IRAs being subject to UDFI tax. But either way, I want to learn more about it, and I want to hang out with you guys. So, the cool thing is, at the end of the day, we'll pick a place and we'll head out to that secret location after the full day seminar, and we'll be able to debrief. And you guys can meet other serious investors kind of doing the same thing and kind of swap notes about the day. All right. Well, we'll talk to you guys next time. Hope you guys can make it. Bye.